Welcome to Lendgo's Mortgage Mastery Podcast, the ultimate guide to mastering your home financing journey. In each episode, we bring you expert insights, practical tips, and real stories to empower you on your path to financial freedom. Welcome to the Lendgo Mastery Mortgage Podcast, your trusted source for expert advice on property management and financing. In today's episode, we're diving into a question that many aspiring homeowners and investors often ask. Can you get multiple FHA loans to purchase different properties? While there is no strict limit on the number of FHA loans a borrower can have, there are certain conditions to meet. For instance, FHA loans are intended for primary residences, meaning they are not typically used for investment properties. In this episode, we'll delve into the details of obtaining a second FHA loan, including understanding FHA guidelines, providing documentation for relocation purposes, and maintaining good credit. We'll also explore alternative loan programs, such as VA loans, USDA loans, and conventional loans for borrowers who may not qualify for multiple FHA loans. While you're considering your options for multiple FHA loans or exploring alternative financing solutions, this episode will provide you with valuable insight and tips to help you navigate the complex world of property investment and financing. So if you're ready to learn more about whether you can get multiple FHA loans to purchase different properties and how to make the most of your financing options, stay tuned for this informative episode of the Lendgo Mastery Mortgage Podcast. Let's talk about understanding FHA loans. FHA loans, backed by the Federal Housing Administration, or the FHA, plays a crucial role in making home ownership accessible to individuals with low to modest incomes. As a government agency, the FHA ensures loans provided by lenders mitigate the risk for lenders and enable them to offer more favorable terms to borrowers. These loans are particularly attractive due to their lower down payment requirements and more lenient credit score criteria compared to conventional loans. As a result, FHA loans are often the preferred choice for individuals who may not qualify for conventional financing. Whether you're a first-time homebuyer or looking to invest in additional properties, understanding FHA loans is essential. Knowing the eligibility criteria, application process, and benefits of FHA loans can help you make informed decisions about your home ownership journey. Let's talk about the 4 key features of FHA loans. FHA loans boast several key features that make an appealing option for home buyers. First, their low down payment requirement sets them apart, with borrowers needing only 3.5% of the purchase price to qualify. This feature significantly reduces the initial financial burden of purchasing a home, making home ownership more accessible to a wider range of individuals. Second, FHA loans offer fixed rate and adjustable rate mortgage options. This allows borrowers to choose the type that best fits their budget and financial goals. This flexibility caters to varying preferences and circumstances and ensures that borrowers can find a loan structure that suits their needs. Third, FHA loans are renowned for their flexibility regarding credit scores. Unlike conventional loans, FHA loans are more forgiving of lower credit scores. This provides opportunities for borrowers with less than ideal credit histories to secure financing for their home purchase. Fourth, the fact that the government backs FHA loans is a significant advantage. This government backing instills confidence in lenders, making them more willing to approve loan applications from borrowers who may not meet the stringent requirements of conventional loans. As a result, FHA loans offer a pathway to home ownership for individuals who may face challenges securing financing through traditional channels. So, what about multiple FHA loans? The question of whether you can obtain multiple FHA loans is one that arises frequently among potential borrowers. Now, while the Federal Housing Administration does not explicitly restrict the number of FHA loans a borrower can have, there are guidelines and restrictions that borrowers need to be aware of. First, FHA loans are primarily intended for primary residences. Borrowers are required to certify the property they are purchasing with an FHA loan will be their primary residence. This means that allowing FHA financing for investment properties or vacation homes is generally not allowed. The FHA aims to facilitate affordable housing for individuals and families, and their loan programs are structured accordingly. Additionally, although there is no strict limit on the number of FHA loans a borrower can have, they are typically limited to one FHA loan insured mortgage at a time. This restriction is in place to ensure that borrowers are utilizing the FHA loan program for its intended purpose, which is to help individuals secure affordable housing. However, there are exceptions to this rule. In certain cases, borrowers may be eligible for a second FHA loan if they are relocating for work or experiencing a change in family size that necessitates purchasing a new primary residence. To qualify for a second FHA loan under these circumstances, borrowers must provide documentation supporting the need for the new property, such as a job transfer letter or proof of family expansion. On top of all of that, lenders will assess the borrower's financial capacity to handle multiple mortgages. Now, this evaluation includes analyzing the borrower's debt-to-income ratio to make sure that they can manage the financial responsibilities associated with owning multiple properties. Lenders want to ensure that their borrowers are not overextending themselves financially and that they have the means to meet their mortgage obligations. In summary, while it is possible to get multiple FHA loans under certain circumstances, borrowers have to adhere to FHA guidelines and they have to demonstrate a legitimate need for additional financing. So whether you're considering a second FHA loan due to relocating or another qualifying reason, it's essential to consult with a knowledgeable lender who can guide you through the process and help you navigate any complexities. Here are 7 tips you can use to obtain a second FHA loan. Number 1, understand FHA guidelines. Now, before pursuing a second FHA loan, make sure you familiarize yourself with the guidelines and restrictions set forth by the Federal Housing Administration, because these guidelines outline the eligibility criteria and requirements for obtaining multiple loans. This will make sure you have compliance with FHA regulations, and when you understand these guidelines, you can navigate the loan process more effectively and you can increase your chances of approval. 2, work with an experienced lender. So choosing the right lender, that is so important when seeking a second FHA loan. Look for a lender who is experienced in FHA loans and also multiple property financing. An experienced lender can provide valuable insights, guide you through the loan process, and help you navigate any complexities that may arise. They can also offer personalized advice tailored to your specific financial situation and goals, and this will increase the likelihood of a successful loan application. 3. Gather your relocation documents for proof. If your intention for obtaining a second FHA loan is relocation, be prepared to gather documentation supporting the need to purchase a new primary residence. This could include a job transfer letter, proof of a change in family size, or other relevant documents. Providing clear and compelling evidence of your relocation circumstances will strengthen your loan application and improve your chances of approval. 4. Maintain good credit. A strong credit history is so important when you apply for multiple loans, and that includes second FHA loans. Lenders typically look for borrowers with credit scores falling within the excellent or good categories. To improve your approval chances, focus on maintaining positive credit history, make timely payments, and manage your debts responsibly. Monitor your credit report regularly and address any inaccuracies or issues promptly to ensure your credit profile remains strong. 5. Fulfilling previous FHA loan obligations. So before you apply for a second FHA loan, make sure you fulfilled all the obligations associated with your existing FHA loan. So this will include making timely mortgage payments, complying with all the terms and conditions, and meeting any other requirements outlined by the FHA. Lenders will carefully review your payment history and compliance with FHA guidelines when assessing your eligibility for another loan. 6. Consider co-borrowers. If you encounter challenges in meeting FHA requirements for multiple loans on your own, consider asking a friend or a family member to be your co-borrower. A co-borrower's income and credit history can strengthen your loan application. This could potentially increase your chances for approval. It's essential, of course, to carefully consider the responsibilities and implications of co-borrowing before you do this step. 7. Seek professional advice. Given the complexities of the FHA loan process, especially when considering multiple loans, it's advisable to seek guidance from a mortgage professional or a financial advisor. These professionals can provide expert advice, answer your questions, and help you navigate the FHA guidelines effectively. They can also offer insights into how getting multiple loans may impact your financial situation, and it can provide recommendations tailored to your specific needs and goals. Here are 4 additional considerations you need to think about. 1. Keep records. Maintaining accurate and up-to-date financial records is really important when you're applying for a second FHA loan. Lenders typically request various documents to assess your eligibility. This could include tax returns, pay stubs, bank statements, and other financial records. Having organized records readily available can streamline the loan application process and help demonstrate your financial stability to lenders. When you keep meticulous records, you can provide the necessary documentation promptly and increase your chances of approval and expedite the loan approval process. 2. Reserve your funds. Building a reserve fund, that's really important when you're seeking a second FHA loan, because lenders could require you to demonstrate that you have savings to cover several months' worth of mortgage payments as a contingency plan. This serves as a financial safety net, and it assures lenders you can handle unexpected financial challenges like a job loss or medical emergencies without defaulting on your mortgage. By maintaining a reserve fund, you not only meet lender requirements, but also protect yourself against unforeseen circumstances that could jeopardize your home ownership. 3. FHA Streamline Refinance. If you already have an existing FHA loan, you can explore the possibility of an FHA Streamline Refinance, and this can be advantageous. This program allows borrowers to refinance their FHA loans with minimal documentation and underwriting requirements. This makes it easier to take advantage of lower interest rates or other benefits. When you have an FHA Streamline Refinance, you can potentially lower your monthly mortgage payments, reduce your interest rate, or change your loan term without undergoing a full credit check or appraisal. This streamlined process can save you time and money, making it a viable option for borrowers looking to improve their loan terms. And number 4, explore alternative loan programs. If you find securing a second FHA loan challenging, consider exploring alternative loan programs that might better suit your needs. There's a lot of different mortgage options that exists beyond the FHA loans, like conventional loans, VA loans, USDA loans, and jumbo loans. Each has its own eligibility criteria and benefits. By researching alternative loan programs, you can identify options that align with your financial situation, home ownership goals, and preferences. Working with a knowledgeable mortgage professional can help you explore alternative loan programs and determine the best fit for your needs. So, what are some alternatives to FHA loans? When considering alternatives to FHA loans, several mortgage programs are available that cater to different borrower needs and circumstances. Here are 6 alternatives I recommend exploring. 1. Home Equity Line of Credit, or HELOC. If you have significant equity in your current home, a HELOC could be a viable option. This revolving credit line allows you to borrow against your home's equity, providing funds for various purposes, including real estate investments. With a HELOC, you can access funds as needed, making it a flexible financing option for homeowners. 2. VA loans. For military veterans, VA loans offer attractive terms and benefits. Backed by the Department of Veteran Affairs, these loans typically feature lower interest rates and require 0 down payments, making home ownership more accessible for veterans and their families. VA loans are available to eligible veterans, active duty service members, and certain surviving spouses. 3. USDA loans. The U.S. Department of Agriculture, or USDA, offers loans for rural home buyers with low to modest incomes. USDA loans have lower interest rates than conventional ones and do not require a down payment, making them an affordable option for eligible borrowers. However, these loans are limited to properties in designated rural areas. 4. Fannie Mae Homebuyer Loans. Fannie Mae Home Ready loans are designed to support prospective homebuyers with difficult qualifying for traditional financing. These loans offer flexibility in down payment, and it allows borrowers to put down as little as 3% of the home's purchase price, with a minimum credit score of 620. Home Ready loans are ideal for borrowers with limited savings or lower credit scores. 5. Freddie Mac Home Possible Loans. Freddie Mac Home Possible Loans are aimed at individuals and families striving to achieve home ownership. These loans offer flexibility in down payment requirements, and they allow borrowers to finance their home with as little as 3% down and a minimum credit score of 660. Home Possible loans are suitable for first-time homebuyers and borrowers with non-traditional income sources. 6. Conventional loans. Besides government-backed loan programs, conventional loans are another alternative to FHA loans. These loans are not insured or guaranteed by the government, and they typically require higher credit scores and larger down payments. However, conventional loans offer competitive interest rates and terms, making them an attractive option for borrowers with strong credit and financial stability. When exploring alternatives to FHA loans, consider your financial situation, home ownership goals, and eligibility criteria for each loan program. Working with a knowledgeable mortgage lender can help you navigate the options and choose the best financing solution for your needs. So to sum it up, obtaining a second FHA loan is possible if you meet the FHA's requirements and guidelines. But it's important to understand that the FHA has specific regulations to ensure responsible lending practices and prevent misuse of their programs. One such requirement is that the financed property must serve as your primary residence, which limits the number of FHA loans a borrower can have concurrently. However, if you have a legitimate reason for needing a second FHA loan, like expanding your family or relocating for a job, you can proceed with your loan application. Providing documentation to support your circumstances will strengthen your case and increase your chance of approval. And at Lendgo, we understand that each home buyer has unique financial needs and objectives. And that's why we offer a convenient online platform to connect borrowers with lenders who are willing to provide personalized loan options. Just enter your details and we'll match you with lenders in your area who can help you secure the financing you need for your next home purchase. We hope today's journey into the world of home financing has left you inspired and equipped to make informed decisions on your path to financial freedom. Remember, your journey doesn't end here. To stay connected with the latest tips, trends, and success stories, be sure to hit that subscribe button. Don't miss out on upcoming episodes filled with expert insights and practical advice tailored just for you. For even more resources and exclusive content, visit our website at lendgo.com. Until next time, take control of your financial freedom. And remember, your journey to financial freedom is just beginning. Subscribe, visit our website, and join us again next week. Happy financing!